All right, traders, welcome to today's recap. This is Christian from Hertz Tribeca Trade Group, and today is Tuesday, August 17th. Risk disclaimer in front of you somewhere. There it is. Everything that we're going through here is for education purposes only, not giving out any advice or recommendations. So please make sure that you read that full risk disclaimer. And if the screen is a little bit blurry, it's just because YouTube is not finished rendering the high definition portion of the video. So let's get right into to the day's price action. Nice little comeback at the end of the day. Where did we finish for the day? S&P down a little bit better than 0.75%. So only down 64 basis points. The small caps again, seem to be bleeding lower. They finished down 1.2%. Same thing with the micro caps. I was looking at these earlier, and like I said, there was some recovery here at the end of the day, so things didn't really look that bad. Before we go into any of the charts of the equities, I always kind of like to show bonds, but it was kind of one of the things that when I noticed that the VIX was really going up and equities were going down a bit this morning. One of the things that kind of just stood out to me is that we were not seeing like that much of a crazy risk-off move. We kind of saw that more so on Friday in terms of the bonds rallying. Notice that they are kind of tucked in there into that value area for the month, right? And again, just shows how well these value areas work. 165.04. This is something that we went over in the pre-market session too. That just didn't jump off the page. So, we're going to keep this video a little bit shorter than the normal, but when we look at things like credit spreads, for example, we're going to go through just a few different charts here. But my interpretation of the price action is this is nothing new, and it should not be a surprise that we see this week of option expiration, and the third week of the month, as well as the fourth week of the month, just continues to be weak, right? And I've pointed this out probably about 3 times. I feel like this is one of those things that my face is going to turn blue for how many times I've said it, but it is what it is. Like, and you should not be and like anybody watching these videos at this point should not be surprised to see weakness at this point, because it's been the same story every month of the year, except for maybe one where it was pushed. It's either that third or the fourth week of the month where it's weak. So if you're not making adjustments and you're getting upset, then I'm sorry to say, and this is to the point and very punchy, but you got to look at yourself at some of these things too, and making adjustments. The other thing that I think I said this in either yesterday's video or the day before. It's two different stories depending on what your time frame is. If you're an investor or a long-term investor, like in my TTG Trend Portfolio, I'm following the trend, and there's not really much to do on days like this because it's set up so that there will be some volatility. The market goes up, the market goes down. However, in my trading account where I'm holding bigger individual positions, or I could be holding bigger individual positions, you have to make adjustments, right? When we know something is typically a difficult environment, meaning those last 2 weeks of the month. Right, and that's until that proves me wrong with the last 2 weeks of the month. I continue to make adjustments. Right, the adjustment that I made over the last couple of days was being a net seller over the last 3 or 4 days. I still added a couple of trades because things like Apple looked pretty good to me and a couple others, but for the most part, I'm reducing risk when I know that there's something that I should be watching that is an issue. And of course, the market's been extremely, well, I don't want to say extremely, but the market's been overbought. It's been grinding higher, like weighing the risk to reward, and that's something that I talked about in yesterday's video too. How much further do you think this market is going to grind higher without some type of little bit of a move back? Right. The other thing that I tell new traders all the time who are in the Tribeca Trade Group is remember that the market goes up and it goes down. Right. It's not just programmed to go up every day. I always get the question in the room like, "Hey, what's the news today?" Right. and that's driving the market down. And I never get that question when the market goes up, right? Because people think that for some reason that the market is programmed to go up. It's not. It goes up and it goes down. That's how a market functions. So anyway, that's my little 2 minutes on the price action. But I tend to look at things when we do get a little bit of volatility to see if there's something that's really systematic going on. Now, we never know for sure, we never know 100%, but if you look at credit spreads, for example, right? So in the fixed income market, usually if we've got to move up in credit spreads, then like something may be going on that's a little bit worse than just the typical pushback after getting overbought. And we're not seeing that. We're just not seeing a jump right now in credit spreads. So that tells me, like, hey, it's normal for the market to pull back. Just, be mindful about it and take things one day at a time. But like here it is. Here was the week, the last month, exactly the same time, right? We had one, out of a week. Right, we had 1, 2, 3, 4 big down days, right? One green day. So I'm not predicting that that's going to happen for the rest of the week, but it wouldn't surprise me either because that's what's been happening every month. And if it's not this week, then it ends up being the next week. So you just have to be prepared for that. The other thing that I find interesting and besides credit spreads and so on and so forth, I was on Bloomberg TV earlier just talking about what's been going on with market breadth. That I do find concerning, right? The fact that we're just not seeing decent participation for more than a day or two. We started to see that last week where we started to see some other areas of the market turn up, like the materials, right? Metals and mining. Now they could pull back, from where they were. You could see the bar today, for example, on the industrials. I still think like some of this is perfectly normal, but I do think at some point we're going to need better participation, right? So that remains to be seen. That's something that's just going to have to get better. And I don't have the answer to when, that's going to happen. But if you look at things like the advanced decline line and you look at both of them, right? I look at the one for the NYSE stocks, which did not make new highs where the S&P did. So that's called the divergence, folks. And I know everybody's talking about this stuff, but I like to put my own little spin on this stuff and just say, hey, while this is going on, right, you should be making, in my opinion, right, of course, again, I'm not giving any advice or recommendations, but if you're looking at this thing and you're overlaying this with the cues, and you're not making adjustments here, and you think this is perfectly normal, then I don't know what to tell you. You should be making some adjustments, considering what's going on under the hood. From an overall risk standpoint. Again, like it doesn't mean that you have to get out of every position. It just means caution. To me, this flashes caution, right? To see the Nasdaq very close to breaking out, and meanwhile, this Nasdaq advanced decline line is breaking down. That's a bearish divergence by definition. So you can Google that if you don't believe me, but it is what it is. Now, does it mean that we get a huge correction right away? This has been going on, while the Nasdaq has been breaking out for a while. This advanced decline line has not. So this is something that's been going on for months. But it's not a great sign. We want to see a healthier market than this. Now, lump this in with where we are in terms of seasonality. We're smack in the middle of August. This is not like a time to say, hey, this is great seasonality and I want to be putting a lot of money to work. This is also just coincides with what we've been talking about. Being a little bit more conservative is kind of get you through some of these tougher months. Okay, so so in summary, it stinks when this is happening, but if you're following the playbook of what you should be doing, then it really shouldn't be that big of a deal. Okay, so just make sure. Here's my trades for the day. I tried doing a couple things today. After the open. Maybe a little bit too early. DHI right? We saw all those calls go up in DHI yesterday. The name opened up down like 2%, 3%. So I tried playing a little bit of a rebound in this name. I like DR Horton, but unfortunately, I just didn't get the rebound when I was looking for it, and I didn't want to stay in calls, so I dumped those after taking one target, and I did a lot of that, right? So this trade really worked for me, and I reloaded in the trade, and when I reloaded in the trade, it didn't. It said we'll roll these. So 1430. I added a little bit on here at the end of the day, but it just didn't. I was looking for this thing to kind of blast off. More, maybe a little bit too difficult of a tape. The thing that I concerned. So again, I'm using that word concerned. I'm a little bit concerned because it didn't hold above value. I need this thing to hold above 309. However, it's really close. Couple other names too. What you'll notice in a weak tape is you're going to have some areas or some names hold up pretty well. Some of these names that have had earnings, the really good earnings reports, are holding in here quite nicely. This team, very nice to see this name up and the Nasdaq down. Right. Another one. I bought a little bit of Hubs today. Right. This was a name also that gapped up, hasn't really done much, but holding the gap. Right. And then the third one in this group that gapped up, or that I'm looking at, Paycom. Now this one was down 2.3%. I did have a big day yesterday, but these are the areas that I kind of look at first, like DXCM, which was a follow through trade from yesterday. I actually took this trade off today at 510. That's kind of what I was looking for, especially because I know what type of a tape it is right now. 8CNP held up very well. This is a name that I'm still long. So I hung on to a couple positions, but you could see I just cleared out of some starters once I saw that there was a decent amount of volatility on the tape. This Datadog looks fine, by the way. So sometimes I do that. Sometimes I clear out of some starter positions or some trades that are residual positions, and then I kind of just look, right, and observe, right? We just don't know sometimes when we have days like this if we're going to bounce right back. I know a lot of these days we have been bouncing back quite nicely. So sometimes if you sell into the weakness, you feel like a big jerk. But I don't mind doing that with like residual positions and starter positions because I feel like I can always put them back on, and it kind of just cleans the slate for me, right? So that's it, guys. Couple other things like SMH. I've been kind of hanging in this trade. I was actually looking to add to it in here, and it just didn't convince me. Right, it just didn't convince me enough to hold it. So, now that this thing broke back into value, it will probably bounce from here. But for me, the whole trade was a breakout trade. So once I see a name like go back inside value, then it's time to just reassess. So I got out of this starter position, and then just a couple profitable trades that I didn't want to have a profitable trade go negative on me. So that's it, guys. That's it for tonight. Like I said, it'll be a shorter video because I have a meeting after this. But take it one day at a time, and we're at August 17th. So in my opinion, there's no need to press on the accelerator. And if you have a bad day, or have even if you have a bad couple of days, now to me is just not the right time to kind of say, hey, I'm going to jump into a couple of trades just because I'm down a little bit of money. All right, so just take it day by day in August, and be patient, because I do think at the end of the day we've seen so many good earnings reports and good clean looking charts. Just have to give them time to kind of do their thing. All right, guys, have a great night. See you tomorrow.